Alrighty, traders, welcome. It is Monday, December 11th, 2023. Let's get into the accounts and let's look at some of the trades from today. Take a quick look at the markets first. Let me jump on, share my screen with you. Let's just jump into the markets. And SPX was up 18 points today. SPY up 1.79. Key for today, though, was we've been in this tight trading range since November 22nd, breaking out a little bit on Friday and then really breaking out a little bit more today. So finally got a break out of this tight trading range that we were in. I mean, a 17-point break now, a massive breakout on SPX, but a break above nonetheless. So had a previous resistance, a previous high here, breaking out, a pretty bullish sign overall for the market. So breaking out of this consolidation now, this consolidation has been about I don't know, 6, 7 point range for the most part. So thinking that might take us to like 466, 467. Doesn't mean we'll top out there, but that would be my initial target on that as we move to the upside. If we're looking at the weekly, MACD RSI has been rising, so still solid there. And then on the daily, you have had some, MACD had been falling, now kind of starting to pull back up a bit. And then you've got RSI rising back into that overbought territory. So we just remain overbought on RSI almost since the middle of November. So almost a full month of just being overbought on the indexes. How long can we stay there? Again, we can stay overbought or extended farther than most people can remain solvent, right? So we'll keep it there, but it's a good thing for us. We don't mind what the markets are doing. Now, the tech stocks were up, the Qs here. Qs up 0.85% today, which was pretty good on the session, continuing to just move higher. Nice little pullback, bounced off the 21 EMA, and then just moving back higher. MACD, RSI rising on the daily, and the same thing on the weekly. So tech stocks all in good order, moving up pretty orderly and pretty well. And if we take a look at the IWM, uh, here you can see that we had a bit of an update, 0.2%, not a whole lot of anything. MACD been tipping over, but RSI has been trying to rise. A little conflicting there on the daily. And if we look back here on the weekly, you can see that MACD and RSI have been rising. So overall, pretty bullish. We had seen some rotation out of some of the tech names into small caps, and then tech starting to pick its momentum back up today. Looking at the stocks over their 50-day moving average, we are now up to 0.85. So 85% of all S&P companies are above their 50-day moving average. That's a pretty extended area. I think every time that we have gotten to this, almost to this 90 point here, 90, here we've got to 0.92, here we got to zero point 0.9, and every single time we touched that 90 mark, we reverse lower, and we reverse lower pretty significantly. And so I think that's something to really be aware of here, is that we are getting overextended, and every single time without fail for the last year and a half. Every single time the amount of stocks over the 50-day moving average on the SPX, every time it's hit 90 or 92, it has reversed, and it's reversed pretty hard each time. Put call ratio continues to be fairly weak. VIX up just fractionally. It's just doing nothing at 1263. So just no volatility in the market. Looking at the US dollar today, the US dollar up fractionally on the session. Weekly, looking to maybe put in some kind of a reversal higher. We'll see what that looks like. And on the daily here, MACD and RSI have been moving higher. So some strength in the dollar, which is interesting to see here. Certainly affects a variety of different things. Could be a little weaker for the market, but it's certainly affecting gold and some of the other things that are out there. Let's take a quick look at the 10-year Treasury. 10-year Treasury index, we did pop back out above this downtrend today. Now, overall on the session, it was a down session. However, for most of the session, it was up. So something to keep an eye on. You got MACD moving higher, RSI moving higher a bit on the daily. The weekly has been negative and falling. So it's just a little bit of a bounce in the larger current downtrend that we're in, maybe, or do we start to see some firming up of rates ahead of the federal uh, open market committee meetings this week? So the Fed will be meeting, and we did have slight dip on TLT today, being pretty much the inverse of what we're looking at here, coming back to maybe this uptrend line that we have here. Do we just bounce and move higher? Maybe, but MACD is heading lower, RSI is heading lower on TLT, and PSAR bearish reversal signal today. So that's something to keep an eye on. All right, 6A down on the session. So the Aussie dollar dropping a bit on the session with the dollar firming up. If we look at 6B, let this thing get loaded here. 6B just fractionally higher on the session. Not a whole lot of anything. 6C, which is Canadian dollar. So look at the Canadian dollar here, moving up just a bit on the session, and the euro also moving up a bit on the session here. There we go. Not big days at all with the dollar up fractionally. These were just up fractionally as well. Now, oil on the session did halt its slide a couple of days ago and has been moving higher. So as we look at oil, another decent little bit of an up session here. MACD on the daily starting to move higher. RSI coming off these oversold levels. So did we put in somewhat of a base on oil? Hard to say, but I do think so. I mean, I do think that's 68, 69, a little bit of an overreaction. I still think 70 is a good low range here to bounce off of, and we just continue to add oil. In fact, right now, using CL futures, oil futures, it is my largest trading underlying of all. In fact, I have now twice the capital being used for oil futures trades than I am using on ES trades. And that's saying something. That's pretty hard to get to. All right, so over here on gold, another down day on gold. So the gold just, as the dollar has been rebounding, gold has just been falling on the dollar. MACD, RSI falling, broke down, filled a little gap up here. And now we're down really to this, I don't even think this trend line's much of value of anything, but you broke this recent uptrend here down, breaking the 21 EMA down to the 50 EMA. So weak dollar, or I'm sorry, stronger dollar, weaker gold moves, and gold on the weekly now is a second pretty good week down. MACD and RSI falling now for the second week in a row. All right, that's where we are on that. Bonds, we've already touched base on TLT, getting a little bit of a pullback here as we get into this tight triangle. We'll take a quick look at live cattle. Why? Because we've got live cattle futures trades on. Live cattle having two massive up days. So last Friday, big reversal day off the bottoms here, and another follow-through day today on live cattle futures. Again, I think it was overextended to the downside, hitting the 3 ATR line down here, as well as RSI oversold and now coming back up with MACD reversing and heading back up as well here. And maybe, I mean, one day does not make a week, but maybe we get a MACD reversal on the weekly. This is a really tight descending wedge pattern, and I think it's going to come down to tomorrow or the next day potentially. Do we break to the upside and get any kind of a move in LE? In fact, it was up for us significantly today. We had a $1,260 gain on our live cattle 112 trade that we have on. So a good trade for us overall on the session. All right, and then so that's futures. Taking just a quick look at oil volatility dropping today, gold volatility waiting. and gold volatility pretty much just unchanged on the session. Jumping into our sectors for today, uh, looking at the biggest winning sectors right now, semis, fantastic day, just cranking to the upside on semiconductors, getting into over bought territory. Retail up 1.65% today, so that's been moving up. And then you do have, XLP, XLI, your industrials all up about 1% on the session. And then XLK, tech stocks up, 0.87 of a percent. And then holding up the rear here, communications down a bit on the day, biotech down a bit on the day, which I think is an interesting potential trade setup coming up. Gold, gold miners down on the session, but just barely. I like the candle. I like where we are. I think we go a little bit lower, and then I think it's our time to look at gold miners in here. And then regional banks have just been on a tear as well to the upside. All right, taking a look at some of the larger stocks out there. Apple dropping significantly on the day today, so which is interesting. So SPY is up, Nasdaq's up, Apple is down on the session. So Apple dropping on the session 1.29%, a little bit of a gap down on Apple. Microsoft down as well on the day. Amazon down 1% on the session as well. So again, most of the big name tech stocks were down, yet the markets were all up on the day. So a little bit more of a broad-based underlying rally to help support the market. It's hard to have Apple, Microsoft, Amazon, Meta, Google, Nvidia, Tesla. Every single one of those 7 stocks was down today. And all down decently, all down at least 1% or more, with the exception of Microsoft. So we'll keep an eye on what's going on with the Magnificent Seven here. Hard to have an up day when all of those are dropping, but we'll see what happens. Overall, Tesla down $4 as well, down 1.68%. So Tesla falling. I think one stock to take a look at here, which is interesting, AMD semiconductors, are doing really well. AMD just having another unbelievably great day, heading overbought, MACD rising, just a fantastic run here on AMD, unstoppable. And I'm watching Costco as well. So we got Costco earnings are coming up on the 14th, which is 3 days from now. But if you take a look here at Costco, gap up today, Costco very overbought and rising heading into earnings. So again, one of those things was very similar to Nvidia, where it ran up hard into earnings, and then even a great earnings report really couldn't keep it moving too much higher. So I think on this move higher, I think it's pretty extended. It would need blowout earnings to propel it way higher from here. I think a pullback is potential on Costco, but it's a phenomenal story, but I think it's just getting way ahead of itself, gapping up above the 3 ATR level today on Costco. So there's where we are on this. Let's take a quick look at our trade tracker and see where we ended up on the session today. All right, so we ended up last week down overall for the week, simply because we had a strangle in live cattle that went against us, and then we had some gains on Friday to help that a bit. So down last week, but today, let's get into the metrics. So Delta continues to fall. We are now negative on Delta, minus 0.228. So really good negative delta. Overall, 0.07%. So we're delta neutral with a little bit of a negative bias. I like that now, as I believe the market is getting more and more overextended to the upside. The fact that we're starting to accumulate more negative delta. However, we have enough theta to just keep powering us through. And the way our trades are structured, I think this is really good stuff for us. You want to be this fractionally, you want to be as close to delta neutral as possible. I think negative delta right now being overbought is great, considering our theta is up at 1,075, which is 0.33%. A little light on theta, maybe we need to put some stuff on. And we actually did put a trade on today. Net leg jumped a little bit on the session, 329,667. We're just sitting there just off of the all-time highs of 324, or I'm sorry, 333, so 334-ish. Is our all-time high. I believe that 334,898 was the largest. So really 335. So we're close. I mean, we're within a good day of that. BP did pop up a little bit on the session today. It's a little bit high, sitting at 249 or so, 248 here. 75% of which 10% of that is in BIL. And we got the distribution on that already. In fact, well, we don't have to look it up, but we should make a little over $500 on that every single month. So it's free money right now. All it's using up is a little bit of the cash buying power that we have. So we trade BIL. Why am I trading BIL versus anything else? To me, it's just easier. I don't need to go to Treasury auctions. I don't want to mess around with custom numbers and individual treasury treasury bills and trying to buy the individual T bills themselves. I'm just fine letting someone else do all of that work, and I just buy bill. You can do S-Gov, but I like bill. It's just easy to get in, easy to get out of in one trade. I don't go and have to pick individual T bills that I have. To me, it's just too much work. Okay? Now, if you're making a ton of money, and I know people making $35,000 a year on T bills, maxing out an account. If you're not trading futures, then you got to go 100% in on bill or on treasury bills. And it's fine, however you want to do that. It's just too much for me to manage all of those different bills. Now, because we're using futures, futures uses cash. Okay. So it reduces our cash balance for our futures trades, and we're mostly futures traders. So it really is difficult for us to do a lot with T-bills here. But my goal is 50% of my account buying power being used for trading. Okay. So which means about half of my cash is already being used for those futures trades. I may get up to 60%. What are we at today? 70, we're at 65%. Right now, 10% on top of that for bill. I could probably go 20 or 30%, but at 30%, I'm going to start to get into potentially some margin interest. But really, if you're doing bill, you got to really determine the amount of cash that you have available in your account to trade. If you're trading futures, futures is going to use a chunk of that cash, leaving only X amount of cash available to buy bill with. And bill is only being bought with up against that cash value. Okay, so because futures is using the cash balance, I can't trade a lot of bill here, but you know what? We can go 10% of our account. We can buy $128,000 worth of bill using about $3,000 in $30,000 in margin. That $128,000 in bill, which is somewhere about 5% annual, is going to give us about $6,000 in free cash, free money. So it's great. You make $6,000 in cash a year. I'm going to make roughly $500 a month. Pays for hedges or anything else you want to do. If you really want to boil it down, it could pay for airfare or anything else I want to pay for. So using bill is going to allow us to just use that free cash that we have and put it to work, okay, while we use margin for our trading. Now, if you're not using futures and you're trading SPY or SPX, whether it's Reg T or portfolio margin, doesn't matter. Now you have 100% of your cash because those equities that you're buying, those are only using margin and they're not decreasing your cash balance account available to purchase bill with. Hopefully that makes sense for everybody here anyway. And then on the day today, daily realized $1,530. That was us closing out a 112 trade on. Let's take a quick look. That was a 112 trade on oil. So we took off one of our 112s on oil. We took it off for over 200% winner because we were in the trap and we were able to capture almost 90% of the actual value of the full put debit spread in that trap. So I think we closed it at like 90, almost like a 97% of the value of the PDS, and we closed it 3 days early. and then we'll let the naked puts just fall off. So $1,530 were made today on that 112 trade. Still down fractionally on the month because of the strangle trade, but we have 112s to close yet that we haven't even gotten to. So should have a decent December lined up. And if we take a look quickly at the overall account that we're in on the day, we are at 98,736. So right sitting on the edge of that $100,000 in actually realized gains and losses for the year. So we're sitting at about $100,000 in realized gains of the year. Our P&L year to date is 39.5% in realized gains. Okay, realized gains on the year. We started with a net lick of 250,000, and we managed to generate $100,000 roughly worth of cash, 98,736. So we're in good shape. I like where we are. By strategy, the 112s are leading the way, 47,593, 100% win rate on those. Strangles, 31,700, roughly an 89.2% win rate there. 112 trades on futures, making 23,809 with a 97% win rate on those. Zero TTE up 9 grand, 75% win rate on those. And then we've got some losses on leap puts and some spec trades. A lot of the leap puts, we closed those out. We took some 2x losses early in the year in March down here. So those SPY leaps and as well as a couple strangles came off in March. April was where we really took a bath on zero DTE trades. That was a terrible month. And then we did lose some spec trades and hedges in June, mainly the UNH, which is really where I swore off that UNH call. That's where I really swore off trading stocks. I mean, there'll be a couple here and there, but for the most part, there are no stocks in my portfolio. If we take a quick look at the overall portfolio that I'm trading here, you're not going to see a single stock. Why? That UNH was the last straw. When somebody, I don't know if it was a CFO or just somebody came out and just made some comments about surgeries may be down and we're not going to make the revenue. All it took was one guy making some innocuous comment somewhere that really wasn't huge, just tanked the stock, triggered our loss, nailed us on UNH, and that's where I really, on a put spread, we had a great put spread running, and because one guy opened his mouth and tanked it, I had had enough. I'm no longer, I hate stocks, not going to trade stocks. I had really willed it down, and that was really the last straw. So anyway, we're looking good. We had a really nice up day today overall in the accounts. And we're looking forward to going forward. But if you can, as you can see here, man, on CL, I've got 4 different futures expirations worth of CL using, the majority of my buying power is taken up with that. So we're using quite a bit of buying power for CL, less on ES, but we have some really good things in ES here. We got a bear trap that's sitting at 85% in 7 days. We've also got a bunch of FB trades, a tiered FB trade, FB112 trade, a BA112 trade. We've got hedges on. We're ready. If the market decides it's going to hell in a handbasket tomorrow, then we're in really, really good shape. Love where we are overall in our account. So good stuff overall. Like where we are. Great day today in the market. Let's see if we can do it again tomorrow. Everybody stay safe. Enjoy a great rest of your evening, and we'll talk to you tomorrow. Bye-bye.